Alrighty, gang, let's jump into our results for the last trading day of 2023. So December 29th, 2023. Let's get into it. You don't need to look at me. Let's get into the account. So let's start with the account first today. So let's see where we ended up in the account. We can spend time looking at charts and stuff later. But I want to cover how we did, how we ended up for the month, how we ended up for the year as a whole. Really, really good stuff this year. Had some ups and downs, and you're going to have that in trading. So let's take a look at how we finished the week. So just want to make sure I got the right numbers here, but ended up the day with 135 positive delta, so 0.04%. So we're pretty delta neutral, which is our overall plan, is to be fairly delta neutral between strangles and 112s and hedge trades and put debit spreads that we have on. We should always be somewhere in that delta neutral-ish area. Our theta ended up at 1,037, so really good theta to end the year, 0.31. I think in a low vol environment, I think that's perfectly fine. I'm happy where we are with theta to end the year. From a net lick standpoint, happened to eke out a new all-time high on the year. So we finished at our highest level of the year, 335,548. Again, we started this account 4 years ago in the Income Navigator service and with $30,000. And we have not added a single dime to this account in 4 years. We've just grown it naturally with the trades and strategies that we put on. But end of the year, 335,548, which is fantastic. We started the year at $250,000. So overall, pretty good return on the year. Now, again, that net lick is what's reflected in there. It's not actually realized gains and losses. That's the actual current net lick at the end of the day. Get some trades that are losing, some trades that are winning, and that's where we are. So BP usage ended the year at 247,034, which is 74% almost. 10% of that is in bill. So really about 63%. It is a little high. I think we'll let some things roll off before we add anything new. We put a pretty big oil 112 trade on Thursday, and that took up a bunch of buying power in the account. So because of that, our buying power is up a little bit. But I'm okay because the majority of the buying power, we're at $247,000 in buying power. But when I'm looking at it, only 50,000 of that is concentrated in ES. So not even a quarter of the buying power is in ES right now. So we've got oil, we've got gold, we've got copper, we've got live cattle, and we've got the NASDAQ. So if you want to add the NASDAQ in there, puts us around $60,000, which is about 25%. So people are asking me, your buying power is over 50%, which is your threshold, and are you nervous about that here with the market overbought? Not really, because only 25% of total buying power that I'm using is actually in the NASDAQ or the S&P. Everything else is a bit diversified in other areas. Doesn't mean that there's no correlation here, but you've got oil, you've got gold, you've got live cattle, you've got copper. All of these are quite a bit different than just S&P. So my funds are not concentrated in S&P. So I'm not super worried about where my buying power is if it's a little bit over the mark. So, and then understanding that 32,000 of that is also in BIL. So of the total buying power, not even a quarter of it is in the direct market indexes here. So anyway, that's where we ended up. And if we're looking at our daily realized gains, we knocked out another $865 in the market on Friday here. I'll talk about what we closed. And we ended the week up $5,640 for the year, putting us at about 5,400 for the month. So it wasn't the greatest month because we took 3 strangle losses, 2 on ES and 1 on LE here. So that impacted our overall month. Though it wasn't the greatest month. Wasn't bad, though. We still had a nice 1.6% return for the month. And I'm pretty happy with where we are. We actually finished the year at 105,254. So total realized gains, 105,254 on the year was the realized gains. That puts us at a realized gains on the year of 42,000. I'm sorry, 42,000. That would be really fantastic, wouldn't it? At 42.1% realized gains on the year. So our total trades, we realized about 42,000 in gains on the year. And even if we look at where our net lick ended up, we can take our net lick. Okay, let me clean it up just a tad. So we can look at the actual account value as well. Let's look at a percentage here. Okay, account was up 34.22. So our net lick increased 34.22%. So fantastic year. If you take a look at the S&P, okay, and look at the year-to-date numbers, S&P was up 24.8%. So 24.8% on the S&P. We were up 34.2%. So pretty good returns, outpacing the market by almost 33%. So we beat the market by 33%. I think if you can beat the markets on a pretty regular, ongoing basis, you're in good shape. Our goal is 3% a month, which should increase our account by roughly 36% a year. We hit 34% as far as net lick goes, and we had 42% as far as our realized gains went for the year, which is pretty good. So if we were trading for a living and we had a $250,000 account, we were able to generate $105,254, a pretty good living on that amount. I expect that to only go up as the account continues to grow and as our other accounts continue to grow. So a really fantastic year. How did we do it overall in the year? We had 55,000 of that, almost 55.5 of that was in LT 112 trades. We had a 100% win rate, and we really didn't start kicking those off till May. So we were only in those for 8 months of the year. We had migrated to that from standard 112 trades. And our standard 112 trades netted us about $24,000 on the year. So $24,000 in just standard 112 trades. We netted almost a little over $23,000 in strangle trades with an 88% win rate. Our 112 trades, the long-term 112 is 100% win rate, and all of the other ones had a 97. We did lose one 112 trade, 97, 90, almost 98% win rate on those. Zero DTE managed to add another $10,500 roughly, with a 75% win rate on zero DTE trades. So I think we got it figured out. I don't know if we'll increase or do any more with that into 2024, but we'll see what happens. We did take some losses on some leap puts, mainly because I wanted to close some out, and we took some hits in March as we stopped out on a couple. Instead of taking an assignment, I decided to just stop out. Had I just taken an assignment and wheeled it, we would have been fine for it, but I wanted to close out, redeploy the cash in some other ways, and that really paid off well for us. And then just on spec trades overall, down just slightly. We had a good December, and we were down about $2,300 on some of the spec trades. We did win 60% of those trades. However, losses were more than wins. So overall, really, really, really good year. Pretty happy with a 42% realized return on actual gains, which is to me what I'm looking for, but still 34% on the account. Okay, outpacing most of those people that are doing a lot more active trading than I'm doing. I mean, I'm not here to try to sit on stare at a screen all day long and try to do the wheel strategy and try to buy stocks and trade stocks on a daily basis and day trade. I don't have the time or the patience to want to do any of that. I just want to generate my 3% a month, okay, without spending hours and hours and hours in front of a computer screen every single day. I have a life, okay, and I have a family and want to make sure that I spend that time with them. So really good stuff here. What did we close on the day? We closed today a naked put on one of our FB 112 trades. So we took in 865 bucks on that. So that was one of the FB, the Fat Bastard 112 trades, one of our hedge type trades. So we closed the naked puts on that. We still have a very fat, very big put debit spread. In fact, this was one of the tiered FB 112 trades. So this is a tiered FB 112, a unique strategy that we're using. We're very well hedged, I feel, going into 2024. And we saw that as the market started to sell off a bit on Friday here, we did pretty well. If the market sells off quite a bit more, we could use a 2, 3, 5% down move. Overall, I would welcome that more than anything right now. I think that would be awesome to see what we're doing and looking at. And just if we look at some of the trades, share this guy with you guys as well. If we want to look at some of the trades that we're doing just on ES alone here, this is what the H4 expiration dates look like. So we're sitting way up here. Okay, if we happen to fall decently into this, big giant hump area here, we've got a lot of potential gains. So 10% from here would put us about 4,300 or so, okay, which would give us about a $21,000 gain to start the year. So I would be okay with that if that happened, and that's just one. That's just one of the accounts or one of the expirations that we're doing. So I wanted to share that with you guys so you can get a sense of where we are. That's the H4 strike, which is where the majority of the trades are right now. There's a couple now in the M4 expiration cycle. All right, so there's where we are. Let's take a quick look at the IRA account. IRA account ended up the week up $2,270. We took in $7,280 just this month alone. So it's a big month for the IRA account. We ended up year to date making over $60,000 in this IRA. We were up 30%. My goal in an IRA is 18%. We hit a 30% year to date realized gain on the stock. So $60,000, having a great, in fact, a great month. In fact, I'm showing 94.30. So I may not have added everything that we had in here. Up 21.50. We did. I did not count that last one. So when did I close that? So actually, I had more gains this month than I anticipated. So we'll take a look at, no, that expired. Let's get rid of that. I think that was just the next expiration. So I'm going to close that down. Bear with me for a second. I know I'm just going through this with you guys on 12/1. We already counted this thing once. So yeah, perfect. Yep. Just making sure that we don't double count anything. So yeah, 72.80 was the month, which is exactly right. So I did have everything correct on there. 3% gain this month, one of the best months. I'm sorry, we're at 57,907. So 57,907. So 29% on the year. I want to make sure I'm accurately accounting for that. So 57,907, 29% gain in the IRA, and we were doggone close to a new all-time high. We missed it by $21. So we were $21 away from a new all-time high in the IRA. As things settled, 246,545. Actually, that's 246,545 was to settle this weekend, and that's 85,692. So we did actually hit a new all-time high. So hey, things keep getting better the more we update our numbers. In here, 146,221. Okay, and 146. So I did not really update all my numbers Friday night. So we ended up pretty delta neutral, 0.06%. Good theta for now. Okay, in an IRA, I think 0.1 to 0.2% is about what we're looking at being able to achieve. It's about half of what we can do in a trading account. 246,545, BP at 85,692, which is 34%. So we've got room to make some trades going into next year, but I like where we are. Good year-to-date gains, up 29% in the IRA. We'll take that. Let's take a quick look at the small account here. 15,385, 70, it's 70, 71. And then this was 23 and 31. All right, so just updating our numbers here. So here's our small account as well. So this portfolio was up 48.92 for the year. Yep. So 48.92 on the year, 371 on the month. Yeah, 370. So depending on rounding, we ended with our small account up 44.5% gain on the year. So started at $11,000 and we were able to gain 45% in a small account without adding funds. We made $4,800. Okay, so if you don't think you can apply these to a small account, you absolutely can. Take an $11,000 account. We started with $10,000 back in November of 22. We were at 11,000 when we started 23. We added 48.92 to it. So a 40, almost 45, 44% gain on the small account. So we run a small portfolio. We run an IRA portfolio for the Income Navigator service. Okay, and then we run the main portfolio here. Those are the three that I'm sharing and trading live. So you can see the live daily trades in there. So how are we positioned going into 2024? I think we're in good shape. I like where we are. Our Greeks are in line. We've got a great trading plan. So we put a new trading plan, just actually updated it yesterday as well. So we have an updated trading plan on there, what we're going to be doing in 2024. I'm excited about what we're going to do. As far as the markets go, I'll get into some charts and some things in the next session. I just wanted to share how we ended up the month, how we ended up the year. I will break these things down a little bit more, which underlyings we used. We'll do a whole review, a year in review, coming up in the next couple of days, next week as well. We've also got some really good trading mindset training that's going on. We've got a lot more training videos and courses coming out for our members. We've been busy adding and recording and putting those together. So an entire library of training courses coming your way. But markets overbought right now, maybe a bit of a pullback, which is welcome. I think the bond market is way ahead of itself. If you look at the Fed Watch tools, they're pricing in 6 to 7 potential rate cuts next year. And the market has already done that. So if we look at TNX, it went from 5% all the way down to 3.8%, hinting 3.7 at one point. So I think the 10-year Treasury have already priced in some pretty significant cuts. So it's dropped from 5 to 3.8 already on a sell-off. So it's already pricing in a lot of these cuts. The key here is going to be what happens if the Fed doesn't cut. Okay, the markets have already priced in. So how much higher is your TLT going to go? I don't know, because it's already priced in. Okay, essentially 4 cuts already. Okay, it's priced in 4 cuts for the year before we even start the year. If the Fed doesn't start cutting and cutting as quickly as the market's anticipating it cutting, that could trigger a little bit of an event out there, I think, for bonds. So I think you got to be careful. If you're in TOT and you have some pretty good gains on this V bounce and this anticipated rate sell-off that's already happened in TNX in the 10-year, I would consider taking some profits, and I think you got to secure your portfolio a bit here with the markets overbought. I'm not calling for a big crash potentially, but we'll see what happens. I certainly think a pullback is warranted. All right, I'm going to let you guys go. Enjoy the holiday weekend. Enjoy New Year's. Stay healthy. Stay happy. If you want to join and find out what we're doing, not only like this video, share this video with friends. Let's get them on here. I'm seeing YouTubers popping up everywhere trading the 112 trades now. So I just found 2 more guys this week trading the 112. Fine. Yeah, some people just join our Discord. They join, they quit, they take the stuff, and they start to try their own YouTube channel. You want to come find out what we're doing, trade live with us, come join us, join the originals here, and help your trading go. All right, you guys have a safe and happy New Year's. We'll see everybody in the new year. Take care. Be safe. Bye-bye.